Today, Bitcoin attempts a comeback after recession fears pushed the cryptocurrency as low as $77,000. And Bill Barhydt explains why he thinks past crypto pullbacks offer insight into the current bout of volatility. Welcome to CNBC's Crypto World. I'm Ryan Baker. Digital currencies are looking to bounce back from a pullback on Monday with mixed success. By noon Eastern, Bitcoin rose 1.5% to $81,000. That's after dropping to the $77,000 mark overnight, its lowest level since November. Ether is headed lower though, down more than 5% in the last 24 hours after struggling to come back from the Monday sell-off. Meanwhile, Solana is in the green, rising 2.5% to around $125. That being said, prices are changing quickly on both macroeconomic news, like job openings and labor turnover data out this morning, which showed some stability in the job market, and geopolitical tensions, like Trump's newly proposed additional 25% tariff on Canadian steel and aluminum. For all the latest price moves for crypto, head over to CNBC.com. Okay, a quick update on one of the stablecoin bills we're watching in Washington. Senator Bill Hagerty announced yesterday that he's reintroducing the Guiding and Establishing National Innovation for U.S. Stablecoins, or GENIUS Act. Hagerty said the bill had been updated with the help of Republican Senators Tim Scott and Cynthia Lummis, along with Democrat Senators Kirsten Gillibrand and Angela Alsobrooks. Senator Gillibrand said the updated bill includes improvements to consumer protections, authorizations for stablecoin issuers, risk mitigation, and more, while Senator Lummis said the bill would let issuers choose between state and national charters. The industry and lawmakers have been hopeful the GENIUS Act could be one of the first major pieces of crypto regulation to pass Congress. Hagerty's announcement of the updated bill said the Senate Banking Committee will take a vote on the legislation on Thursday. All right, let's talk more about markets for our main story. Bill Barhydt, CEO of Abra, weighed in on the recent sell-off with a post on X saying that this pullback feels like 2017, when Bitcoin dropped as much as 70%, but did go on a run much, much higher. Crypto World's Jordan Smith spoke with Bill about the current market moves and where crypto could go from here.
All right, Bill Barhydt, thank you so much for being here. Let's start with your post on X during the sell-off yesterday afternoon. You compared this current correction that we're seeing in Bitcoin to 2017, when, of course, Bitcoin dropped about 70%, but it did recover. It led to huge gains for those who stayed invested. Explain to me why this feels similar to you based on what you're seeing right now.
Sure, several factors, but it all comes down to really two. The first is that we have, in Q4, falling liquidity, right? If you could look at global M2 or just in general, cash coming into the system, and that number was falling. Now, that tends to be a leading indicator for technology stocks, risk on assets, especially crypto, Bitcoin. And usually it trails by about 8 weeks, and we're seeing that now, right? So if you look at the chart for M2 versus Bitcoin and kind of, look about 8 weeks out, it looks like liquidity troughed, a few weeks ago, and price has now followed, and it looks like it's on the rise, which leads me to believe that price will follow. And this is exactly what happened in Trump's first term. There were expectations during his first term that tariffs would lead to inflation, which would lead to a liquidity crunch. And, at that point, the economy was starting to contract a little bit. And there were fears before he took office. And that led to the same liquidity crunch that we had. And as you mentioned, the price pulled back and then screamed forward to new highs after that. And this looks the same.
One of the things that I'm thinking about is obviously institutionalization of Bitcoin is a lot different now than it was in 2017. How does Wall Street's investment into Bitcoin play into what we're seeing right now? And does it make this time different, even though, you're talking about the similarities from this last major pullback that everybody remembers?
Yeah, look, I don't think it does in the big picture. The biggest change to the Bitcoin narrative vis-a-vis institutions is the ETF and in particular the marketing narrative around the ETF, right? Because if BlackRock is out saying Bitcoin good, President Trump therefore saying Bitcoin good, and we have an administration where the entire cabinet are Bitcoin holders, that's fantastic. It's a fantastic marketing narrative for Bitcoin. But the reality is that the price of crypto has by and large been driven by retail, right? It's the number of wallet holders that have an active balance times, the value being transacted over time. And so The reality is that even with MicroStrategy holding tens of billions of dollars of Bitcoin, that's still a relatively small percentage of a multi-trillion-dollar asset. So at the end of the day, it's still retail investors. 401ks are great because, ETFs are great because the 401k and the IRA can now participate, but it's still going to be retail, which means that there needs to be money in the system for people to invest in the first place. And that's why I keep harping on these liquidity cycles.
Yeah. Well, you talk about there how the Bitcoin ETFs could find their way into retirement funds of different kinds. And that brings me to the question around the argument that Bitcoin is a hedge against inflation. And I just want to know how that argument still holds up right now, given these concerns around tariffs or rising prices for groceries or other goods. Where does that argument stand?
So I think long term, right, deflationary assets are a hedge against inflation. I think Bitcoin's value is in the promise of becoming that. I think there are so few people that hold Bitcoin today relative to the global population that it's still in this kind of global accumulation phase. And because that accumulation phase is offset by global liquidity, it's going to have prices that go up and down wildly because it tends to act as a levered bet on that. But long term, it will act as a hedge against inflation, but we simply need to get it out there first, right? And so, to me, that's the promise of, having a deflationary fixed float asset that is unconfiscatable. We know exactly what the supply is going to be, but that's the promise of Bitcoin. It's not yet the reality of Bitcoin. And I believe that promise will be fulfilled over the coming decades. This is not a 2-year play, right? I mean, this is a multi-decade play where you're actually creating an entirely new digital monetary system that the world has never seen before.
Yeah. I'm going to do something I don't normally like to do, and let's talk about price predictions, mostly because you predicted 350K Bitcoin by the end of this current cycle. And I guess I'm less focused on the price prediction itself, but rather what you see that gets us there, some of the biggest catalysts that you're watching, because it feels like, the U.S. cultural catalysts of a pro-crypto president or a pro-crypto Congress, people have traded on that news. They're potentially selling on that news now. What are you watching that could drive us to that next record high that you're talking about?
Sure. There's 4 things in the aggregate, right? So I think lower treasury rates are coming. I think that Trump and Bessent have been very clear that we need to get rates down. When the Fed lowered rates, treasury rates actually spiked. And I believe that was because of the lack of action on the debt burden. I think that action now, combined with resolution to some of these tariff discussions, potentially resolution to what's happening in Ukraine, combined with a slowing economy, I think will get treasury rates down. And the convexity of rates going from potentially 4.5% to, let's say, 3% is significant, right? So that will pump a lot of money into the economy. I think that will lead to lower mortgage rates, which hopefully will unlock, and I believe will unlock, the housing market and soften up and undo the softening in the CRE markets, which are the commercial real estate, which has been a disaster. And I think lower treasury rates may help in the banking system for 2 reasons. One, they will increase demand on the housing side, but it will also help address this issue that I think most of them are basically carrying a massive bond portfolio that is underwater because they bought these bonds in basically a ZIRP era during COVID, and they haven't marked to mark them with the current bond prices, which would probably have many banks truly insolvent. And then the fourth issue that I think really matters here is China. I think China is in a recession, and it dramatically needs to lower rates. And it needs the U.S. to lower rates so that it can basically support its own money printing regime, because a lot of debt, international debt, is priced in dollars. And I think China is going to print significantly. And so I think all of that, combined with massive job cuts that we're going to see out of D.C., and then further tech cuts and housing related cuts, is all going to lead to infusions of capital into the U.S. and global system, which I think is going to have a very positive kind of rocket fuel effect on crypto and tech stocks.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.